When you're looking at the stock market and you see all these companies with their own stories,
Mm,
and you wonder, which ones are going to stick around? Which ones are actually building something really interesting?
yeah, for sure. It's tough to separate the wheat from the chaff right there.
Right. Like, who's got that long-term potential? Well, today we're doing a deep dive on one such company, Impact Biomedical Inc.
IBO, ticker symbol,
Oh, we're
IBO.
gonna have to.
And you know what's interesting about IBO? They're pretty new to this whole public company thing, right? They just had their IPO back in September 2024.
So fresh out of the gate.
Still finding their footing, yeah.
Yeah, that's right. And what we've got here is like a whole bunch of information about them, from news articles to financial reports to stuff they put out themselves.
Yeah, kind of a multifaceted view, pulling in different perspectives.
Yeah, exactly. We're looking at it from all angles, trying to piece together the whole story. And our goal today is to really boil down what we found,
Mm.
to give you the core insights so you can get a handle on IBO's potential and what to think about if you're considering them, as an investment or just like a company to watch.
It's about giving you the tools to make your own informed decisions, right?
Right. So we'll be digging into their tech, how the market's reacting to them, and what the experts are saying. Ready to jump in?
Let's do it.
Okay, cool. So first things first, what is Impact Biomedical all about?
So at their core, they're a biotech company,
Yeah.
but not your typical, big pharma kind of
But there's just,
There's a twist.
yeah.
They've got this consumer healthcare side to them as well, which is kind of interesting. And what really stands out, they're all about collaboration. They're focusing on discovering, developing innovations, but then they partner with other companies to actually bring those things to market.
Okay, so they're not necessarily selling products directly themselves, right? They're more about the development side.
Exactly. They're looking for those milestone payments as they hit certain goals with their partners. And then if those products are successful, they get royalties. It's a pretty agile approach, less upfront investment for them.
Yeah, makes sense. So let's talk about their tech, because that's what really drives a biotech company, right?
Absolutely. And they've got a few key platforms that are pretty intriguing. So first up, you've got Linebacker. Now, this is all about these small molecule X-bonded polyphenols.
That's a mouthful.
I know, right? But think of them as like these tiny customizable molecules that could be used in pharmaceuticals to make drugs work better, make them safer, potentially even as a new kind of sugar substitute.
Mm-hmm.
And they're not just theorizing, they've got a Canadian patent for this tech relating to inflammatory diseases. Plus, there's preclinical research going on in areas like lung and colon cancer. So pretty broad potential impact, right?
Yeah, that's a lot of different applications. Wow. And then there's Litose.
Right, like Tosi. This one's a unique combo of sugars, but with inositol added in.
Yeah.
The idea is they're exploring a lot of different avenues for their innovations.
Now, here's something that really caught my eye. Their recent acquisition of Celios.
Oh yeah, Celios.
This
This
is-
is a big move for sure.
This isn't just another biotech platform, right? This is an air purification company.
That's right. And they've got patents on this tech going all the way out to 2043. So it's a way for IBO to diversify their portfolio, right?
Mhm.
And it could potentially bring in some faster revenue compared to, the long road of developing new drugs.
It's like they're stepping outside the lab and into a whole new market.
Exactly. They're not just a pure biotech play anymore.
Yeah. And we should probably mention here that IBO is still a small cap company, right?
Right. Very much so. Still in those early stages.
And their market cap has been, well, kind of all over the place, ranging from around $6.5 million to almost $60 million. That's a pretty big swing,
Yeah, that kind of volatility isn't uncommon for companies at this point in their journey. They're still figuring things out. The market's trying to figure them out.
Yeah, it's all part of the process, I guess. But when we zoom out and look at their overall strategy, it seems like they're all about taking those innovative ideas and turning them into actual health and wellness solutions. And they're doing it through these partnerships, right?
Right. They're positioning themselves as that engine of innovation that bigger companies can tap into. It's a smart approach, especially for a smaller company.
Okay, so we've got a sense of what IBO does. Now let's talk about who's running the show. At the helm, we've got Frank D. Hussel, chairman and CEO.
We got quite the resume.
Yeah, he does. Over 35 years in commercial banking, a background in law, specializing in things like corporate restructuring and M&A. And since 2019, he's also been the CEO of IBO's parent company, DSS.
That dual role is interesting, isn't it?
Yeah, it definitely raises some questions. On the one hand, all that experience in finance and law could be a real asset for a public company, especially one navigating those complex markets. But.
But.
Yeah.
There's always a but.
There's always a but. DSS's performance under his leadership hasn't been stellar, Declining stock price, some not-so-great financial indicators. Makes you wonder.
Yeah, it does make you wonder, like, how much does that parent company situation influence things over at IBO? Something to keep in mind as we go through this, right?
Right. Okay, so next up we have Mark Susek, the COO. His background is specifically in healthcare, both public and private sectors. He was even the CEO of an oncology-focused company before this.
Okay, so that's directly relevant to some of IBO's areas of interest. He brings that operational experience to the table, which is good to see.
For sure. And rounding out the leadership team, we have Todd Macko as CFO. And just like the CEO, he also holds the CFO position at DSS Inc. Over 25 years of experience in corporate financial management.
So we've got finance, law, and healthcare expertise all represented in leadership. That's a decent mix, I'd say.
Yeah, seems pretty well-rounded. Now, one thing that stood out to me, IBO seems pretty good at communicating with shareholders. They're putting out press releases, shareholder letters, covering their IPO, the patent approvals, even addressing that unusual stock activity we saw back in March.
Oh yeah, that stock spike. Remember that?
Yeah, they even put out a statement about it, saying they didn't really know what was driving it.
It was a head-scratcher for sure.
Totally. But the fact that they're communicating, that they've got investor relations, contact info, it shows some transparency,
Yeah, that kind of open communication is usually a good sign. They're trying to keep everyone in the loop. And they've also got a code of ethics and conduct, a charter for their audit committee. Those are good governance practices,
Yeah.
It builds trust.
For sure. But that DSS connection, it just keeps coming back,
Yeah, it's hard to ignore. Like, you've got this experienced leadership team at IBO, but the parent company's track record under the same CEO, it just makes you think.
Right. Like, are there going to be overlaps, conflicts of interest? What kind of impact will it have? It's definitely something to keep an eye on.
Definitely. It's a factor in the overall risk assessment, right? It's like, how much do you weigh the parent company's history when evaluating the subsidiary?
Okay, so let's get into the numbers. Let's talk about IBO's financial health. Now, here's where things get a little messy.
A little murky now.
Yeah, exactly. We noticed some discrepancies across the different sources we looked at. Like, their reported market cap, it varied quite a bit, from around $6.5 million to nearly $60 million.
That's a pretty wide range.
Right. It's like, which number do you trust?
Well, it happens sometimes with newer companies. Data providers might be updating their info at different times using slightly different calculations. But yeah, that big of a discrepancy, you got to be careful.
Definitely. And then there's the price to earnings ratio. This one was even more all over the place, from single digits to the hundreds. And sometimes it was listed as not applicable, meaning they might not have been profitable according to those reports.
Yeah, the PE ratio can be tricky with companies that are still in their growth phase. They might not have consistent earnings yet. It means you have to look beyond just that one number.
Makes sense. And then when we looked at revenue growth year over year, one source said over 20% increase, another said zero growth.
And the gross margin was either 0% or 100%, depending on where you looked.
It's like, wait, which is it? What's the real story here?
Yeah, those kinds of discrepancies and those core financials, it really emphasizes the importance of doing your due diligence. You got to dig deeper, look at official filings, get those detailed statements. It could mean the company's finances are in flux, or maybe the reporting isn't standardized yet.
Yeah, it's a red flag for sure. But on a more consistent note, their debt-to-equity ratio seemed pretty low, around 0.22 to 0.26, so at least they're not drowning in debt.
Right. That's a positive. It suggests they're not overly reliant on debt financing. But their free cash flow was negative at minus $3.1 million. And their cash position, according to one report, was around $2.6 million.
So they're burning through cash, but they do have some runway.
Yeah, that's the key takeaway. Negative free cash flow means they're spending more than they're making. They'll need to either improve operations or get more funding at some point.
And the price-to-book ratio also varied a bit, from 0.22 to 0.8. But what really stood out was this one report claiming a pre-tax profit margin of over 2,500%.
Whoa, hold on. Over 2,500%.
Yeah. That can't be right, can it?
That's so far out of the ordinary that it's got to be a mistake. It's either a data error or some really weird one-time thing. Don't take that number at face value. You got to investigate further. The bottom line is IBO's profitability is still a bit of a question mark.
Yeah, for sure. But their current ratio was positive at 2.79. So their short-term assets seem to cover their short-term liabilities, which is good, right?
Yeah, it's a good sign for their immediate financial stability. But again, all these inconsistencies, it just underlines the importance of going back to the source, checking those SEC filings, getting the full picture.
Absolutely. And remember, IBO only went public in September 2024, so we don't have a long history of earnings to look at. They did mention net income in their Q3 2024 report, and they restructured their long-term debt during that same period, which could be good.
Yeah, debt restructuring can give them more flexibility, lower their interest payments. But they also reported negative working capital as of June 30th and December 31st of 2023. So even with that good current ratio, it seems like they're having some issues managing their short-term finances.
Okay, so there are definitely some mixed signals there. Now, the Celios acquisition, that was an all-equity deal, right? Valued at a little over $1 million.
Yeah, they didn't use cash for that one. But it did dilute existing shares a bit since they issued new shares to make the deal happen.
Makes sense. We also didn't see any mention of share buyback programs or regular dividends, but that's not unusual for companies focused on growth, right? They're probably reinvesting everything back into the business.
Yeah, they're in growth mode, trying to build momentum. And speaking of the parent company, remember how DSS distributed shares of IBO as a special dividend back in 2023?
Oh, yeah, that's right. That was their way of giving DSS shareholders a piece of the new spinoff.
Exactly. So those shareholders get some direct ownership in IBO right from the start.
Interesting. Okay, last thing on the financials. We saw some wildly different numbers for their return on invested capital, or ROIC. One source said negative 5.47%, another said almost 47%.
Wow, that's a huge discrepancy.
Right. Like, which one is even close to accurate? ROIC basically tells us how well a company is using its investments to make a profit. So seeing those opposite numbers, it's hard to know how efficiently IBO is actually using their capital.
Yeah, it makes it tough to gauge their performance.
Yeah.
A negative ROIC means their investments aren't really paying off yet, while a high positive one would mean they're very efficient. It just highlights the need for clearer, more consistent financial reporting as IBO matures.
For sure. Okay, let's shift gears and talk about how the market is viewing Impact Biomedical right now. Overall, it seems like there's a lot of volatility and some unusual trading activity, especially that spike back in March.
Remember how IBO even released a statement about it?
Yeah, they acknowledged the volatility but said they had no idea what was causing it. Those kinds of unexplained price swings often point to speculative trading, where people are just reacting to momentum, not actual news.
Yeah, it can create a bit of a frenzy.
For sure. And analyst coverage of IBO seems pretty limited so far.
Yeah, some reports said there was no coverage at all, while others hinted at potential upside. It's still early days, so the analyst community hasn't really formed a strong opinion yet.
It's understandable, especially for a smaller company. But the fact that some reports see potential upside is interesting, right? It means at least some people think IBO has a bright future.
Definitely something to watch. And all those recent developments, like the Celios acquisition and those patent announcements, they've probably played a role in shaping how the market sees them.
For sure. Interestingly, the short interest in IBO is pretty low, like 0.08% to 0.23%.
Short interest. You mean the people betting the stock will go down?
Exactly. So despite all the volatility, it doesn't seem like there's widespread negativity.
It could mean a few things. Maybe short sellers don't see a reason for the stock to tank, or maybe they're just not paying attention to a smaller company like IBO yet.
Could be either one. We didn't find much info on options trading activity, so that's still a bit of a mystery.
Yeah, we're missing a piece of the puzzle there.
But overall, the market sentiment around IBO feels pretty unpredictable right now. It's volatile, and it might be driven more by speculation than by, deep fundamental analysis.
That's a fair assessment. They don't have a long financial history. There are inconsistencies in their data, and there's not much analyst coverage.
Yeah.
So yeah, the market's reaction can be influenced by all sorts of things, like news events or even social media buzz.
Speaking of influence, let's talk about who owns Impact Biomedical. Institutional ownership seems pretty low, less than 0.5% to just over 2%.
Okay, so the big players aren't really in the game yet.
Not really. We saw names like Vanguard and Fidelity mentioned, but their stakes are tiny, probably just through index funds.
It makes sense. Large institutions, they usually have stricter rules about what they invest in. They want to see a longer track record, more liquidity in the stock.
Yeah, they're playing it safe. But on the flip side, insider ownership in IBO is huge, over 55%.
Wow, so the people running the company have a lot of skin in the game.
Yeah, they do. And the CEO, Frank Huzzle, he bought some shares in late 2024. Plus, there's been some activity involving the parent company, DSS, buying and selling shares as well.
So that concentrated insider ownership, it can be a good thing or a bad thing.
Right. On the plus side, it means management's interests are aligned with those of the major shareholders. Their wealth is tied to the company's performance. But on the other hand, it might mean there's less scrutiny from independent investors, those institutions that typically help to keep management accountable.
It's a trade-off.
Yeah.
You're essentially putting a lot of trust in that inner circle.
Yeah, for sure. Now, IBO does have an audit committee and a code of ethics, which are good signs for corporate
Yeah,
governance.
those are important checks and balances.
But that close relationship with DSS and all that insider ownership, it does raise questions like, how independent is the board really? Are any transactions between IBO and DSS truly fair to all IBO shareholders? This is something investors should really look into.
Definitely. It's about assessing that potential for conflicts of interest, right?
Mm-hmm.
How much influence does DSS have, and is it always beneficial for IBO?
Okay, to wrap things up, let's do a quick SWOT analysis. We'll look at Impact Biomedical's strengths, weaknesses, opportunities, and threats. Starting with strengths, they've definitely got those unique technology platforms, and they've got patents to protect their intellectual property.
Yeah, that's a strong foundation. And their collaborative business model could be pretty efficient. They don't have to shoulder all the costs of bringing products to market themselves.
Right. And the Celios acquisition, that adds diversification and potential for faster revenue. Plus, their leadership team has a good mix of experience.
Okay, so those are the positives. Now, on the weaknesses side, their track record as a public company is pretty short. And we saw those inconsistencies in their financial data, which is concerning. Their negative working capital is another red flag.
Yeah, and they're pretty reliant on their partners for success. Plus, that low institutional ownership could mean limited liquidity in the stock. And of course, there's that stock price volatility.
Right, lots of ups and downs. It can be a bumpy ride.
For sure. Okay, so what about opportunities? The sectors they're in, biopharma, wellness, air purification, those are all growing markets.
Yeah, there's a lot of potential for expansion there.
Right. If they can successfully develop and commercialize their tech through those partnerships, there's a big opportunity there. And they've mentioned wanting to do more acquisitions, which could fuel growth. Plus, they're tapping into those health and wellness trends that are only getting stronger.
Okay, but we got to talk about the threats, too. They're in some very competitive industries.
Yeah, that's true. And the regulatory hurdles for biopharmaceuticals are tough. It takes a long time to get new drugs approved, and it's expensive. Plus, there's always the risk that clinical trials fail.
It's a high-risk, high-reward game.
Exactly. And because they rely on partners, they're at the mercy of those partners' decisions and priorities. Plus, there are those financial risks we talked about, the negative working capital, the inconsistent profitability, and more acquisitions could dilute their shares even further. And then there's the whole DSS situation looming in the background. So Impact Biomedical, they're kind of a mixed bag, right? They've got a lot of potential, driven by their innovative tech and those patents, but there are also a lot of uncertainties, financially and otherwise.
Yeah, it's like they're at a crossroads. They could really take off, or they could stumble.
Yeah.
It's too early to say for sure.
Exactly. And those inconsistencies in their data, that really highlights the need for thorough research. Any potential investor needs to do their own due diligence, check those SEC filings, and not rely on just one source of information.
Right, you got to get the full picture. And think about the long-term prospects of their technologies, their partnerships. Are those sustainable?
So many things to consider.
It is, isn't it? And here's one final thought to leave you with. With all that insider ownership and those challenges at the parent company DSS, how might that impact IBO's decisions in the long run?
Yeah.
Will they be able to chart their own course, or will DSS hold them back? It's a question worth pondering.
That's a great point. It's all about understanding those dynamics and how they might play out. All right, so if you enjoyed this deep dive into Impact Biomedical, make sure you subscribe to the Stock Analytics AI YouTube channel for more in-depth company analyses.
And remember, this was all based on public information and AI-powered data aggregation. It's for research purposes only, not financial advice. Always do your own research and talk to a qualified financial advisor before making any investment decisions.
Great advice. And don't forget to check the comments below for links to all the sources we use for this deep dive, plus some thoughts on what to watch for with Impact Biomedical in the future. Thanks for tuning in.
See you next time.